All right. Well, I will like to call to order the Monday, May 18th meeting of the City of Monona Finance and Personnel Committee. Would the clerk please call the roll?
Alder Thomas?
Here.
Alder Wood?
Here.
Mayor O'Connor?
Here. We can barely hear Joan. So I don't know if that can be fixed or not.
Can you hear me?
Is there a motion to approve the minutes of the May 4th meeting?
Second.
Any corrections or additions? Hearing none, all in favor say aye.
Aye.
Opposed? Minutes are approved. There are no appearances tonight. There is no unfinished business, but we have a lot under new business. So item 6A, consideration of resolution 20-5-2410, authorizing the issuance and sale of $2,900,000 in water system and sewer system revenue bonds, Series 2020B of the City of Monona, Dane County, Wisconsin, and providing for the payment of the bonds and other details with respect to the bonds. Is there a motion to approve?
Before you approve it, Jeff Belangi is at another meeting. I think he's supposed to call on here very soon, so I don't have him yet here. So I don't know if we can wait to do this one.
Okay, well, I guess we'll just keep moving down and...
He should be calling in. He doesn't have his...
Okay.
He's calling in from his cell phone.
Okay. We'll move on then to item 6B, consideration of resolution 20-4-2406, approval to apply for Wisconsin Department of Natural Resources runoff management grant for Stonebridge Park. Is there a motion to approve this?
Move to approve.
Second.
Dick, are you going to address this? Or who's...
I can take it.
Brian, you're going to have to do something so we can hear you better, I think.
He's on mute.
I know, yeah. I think that's so he doesn't get feedback, but...
Can you turn up my mic, Will? There you go. Okay, is this better now?
No, not really. Sorry.
What happens if you take mute off? Well, we could all mute and then... Would that help?
We get feedback. We get feedback in the room if I take mute off. Give Will 1 second here.
You want me to? I can wing it.
Go. I'll join you in 1 second. Go ahead and start.
Okay, well, that's a little better when your mouth is right up there.
Okay. Anyway, so this is an application, a resolution to allow staff to apply for Wisconsin DNR grant for runoff management. We're targeting Stonebridge Park for this. This property is in the Reach 64 boundaries, and that's something we've been talking about as a municipality for the last couple of years. It's a cost share grant, and right now we're working on what the various options could be for stormwater management, but we need to submit this resolution in order to actually be eligible to apply for grant funding for the project. And the total dollar amount for whatever stormwater treatment system that we would incorporate in Stonebridge is not fully fleshed out yet, so I don't have a dollar figure in terms of what the grant application amount would actually be for at this moment. I don't know, Jake, if you had any commentary on how this interplays with long-term plans for Stonebridge?
Well, I just have one question. Are we also applying for a Dane County grant?
Yes, and that's a separate, that'll be a separate item, yep.
Anyone have any questions?
Good
Kathy?
idea.
Kathy?
I just said it's a good idea.
Doug?
Well, Parks Board did discuss this project last week, and still want to go ahead with both the stormwater part and the larger park project. So.
And if we can do it, it'll help us tick off one on our list of Reach 64 projects, and it will be a good starter project for that. So, any other questions? All in favor say aye.
Aye.
Opposed? Motion passes. Next item C, consideration of resolution 20-5-2407, a resolution waiving interest and penalties on certain delinquent property tax installment payments due in 2020. Is there a motion to approve this?
Move to approve.
Second.
Brian, are you taking this one or is Mark?
We both can. It comes as a result of our discussions at the last city council meeting. The council had requested that we put together a resolution allowing us to take advantage of the county's resolution to waive penalty and interest on delinquent
Could
tax.
you put your mouth way up to the mic? Sorry.
Is this better?
Thank you. Try that.
Is this any better? Does this sound any better, doing it this way? Boy, okay. This is to follow the Dane County's resolution to allow us to waive interest and penalties for late tax payments for the balance of 2020. We discussed this as a city council at the last meeting. You'd asked us to put this on the agenda. This pretty much mirrors the language from Dane County. Mark, do you have any other commentary on it?
And I think the deal is the county has passed this anyway, but if we want our community to be able to use this program, we need to pass our own resolution.
Yes,
That's correct.
I think here is for us. There's two things here. One is we get about $3 million in settlement from the county. It's usually in August. Now we'll only collect everything through July 31st from them. They'll pay us over in August, and whatever they collect later on, they'll settle for us in middle of September 25th, I believe, or 20th. I did talk to the school district and sent Jared an email because they're affected by this too. They settle with the county, all the different districts. The county pays all the different districts, so that'd be MATC, us, and the school districts. I was looking at the settlement sheet. Theirs is roughly about $4.5 to $5 million. They would part of their settlement. I told them what was going on, and all I got back from him was thanks for letting us know. So I assume that they're okay with it. With that, it really only delays settlement for a month, so we should be okay with that.
It mainly affects cash flow, is that right?
Correct.
Mark?
Yeah.
And we get none of the penalty, right? It all goes to county?
Right.
Yep. They assume all the risks, so they collect the penalties and go from there.
Doug or Kathy, any questions?
Nope.
Hearing none, all in favor say aye.
Aye.
Opposed? Motion passes. Is that Jeff?
I believe that's Jeff.
Yes, Mayor.
Okay, do I need to read this over again?
No.
Okay. We're back to item 6A, which we read before. So is there a motion to approve?
So move.
Second.
Jeff, I think we all got a document late this afternoon with dollar figures. Nobody saw that
Yes.
emailed to us.
Sales results? Mm-hmm.
Yep. Okay, Jeff, it's all yours.
Well, thank you very much. Sorry we all couldn't be together. Really appreciate this opportunity. This is our, as you know, our water and sewer system revenue bond issue. We had originally estimated, by the way, congratulations on a fine A+ rating. Just in case anyone's concerned, you know that we have a hard AA stable on our general obligation debt, but to the best of my knowledge, there's no utility that has the equal rating of its community's general obligation. So I didn't want anybody to be alarmed by seeing a differential in the two rates, or ratings, sorry. All in all, what we did in conjunction with that is we looked at markets and buyers, and I had suggested to Mr. Hotaker that we look at the idea of insuring these revenue bonds, which is really somewhat typical and quite cheap, really, in terms of what it saved us, and I'll explain that. By doing that, it vaulted us into the next category, the AA category, which allowed us to show these securities to a lot of buyers who wouldn't normally look at anything less than a AA. So we basically said, let's see what that premium is, and what advantage it would have to be paying roughly an $8,000 premium for bond insurance, getting us a AA. In that process, I told Mark what we would do, and we did, was to look at the two cash flows. Look at the market where a A+ revenue bond would sell, and look at a market where a AA revenue bond would sell. There's going to be a differential in interest rate, I think, as you all know. We took that differential, the perceived differential, based on market data, and present valued it back to so we could compare that potential savings to the cost of the insurance premium. When we ran the numbers, it proved that we would save at least $80,000 in interest cost. Present valuing it back gave us about a $69,000 net savings by paying for the insurance. So I think in another way to saying it, if someone said, hey, I can save you $80,000, $69,000 net present value by you buying a certain item for $8,000, you probably would buy it. So we did. And long story short, we went out into the market with our A+, with our AA BAM insurance. And if you take a look at the sales result page, it allowed us to produce a bit more money. We've dropped our par amount from the $2,900,000 to $2,890,000. We have a purchase price of $2,902,989. That's a net premium of almost $13,000, and we have a true interest cost with all expenses in at a 2.190. We've done that based on a principal amortization, which Mark had suggested that we go out with. So all in all, I think we've done exceptionally well. You also probably have from Joan an email showing a couple more comparables. It was a colored green sheet. It had Osceola, Wisconsin on it and Waterloo, Wisconsin. And if you want to take a quick look at that, if everyone has it, if not, it's probably on your email. You can take a look at the YTW columns and see where, we have a 0.73 and most everyone's at least a 1 1/4 or a 110. On the sales result sheet, we have a beautiful comparable, Fond du Lac, Wisconsin, general obligation, full faith and credit pledge, AA2, which is equal to a AA BAM. One's a Moody's rating, the AA2, the other is a Standard & Poor's rating, but they're identical ratings. One pledges a full faith and credit of the county. One pledges a cash flow from its operation of an enterprise utility. They have a 92 basis points in 22, we have 84. We got 96 and 23, they have a 1%. And you can follow down in 2027, their last maturity, their price was a 142, ours is a 133. So we basically blew through a general obligation AA2, which came last week Wednesday. So the Oconomowoc issue also came last week. That's a AA2. That happens to be a general obligation. It is non-bank qualified, so you'd expect a little bit higher rate relative to the same GO that was bank qualified. But when you look at the differential, say in year 27, a 160 versus our 133, I'm very pleased with this underwriting effort today. We don't see a lot of revenue bonds, and your revenue bonds really did quite well in this market. You're out to a 203 in the last two maturities, but as I said, all costs in for that 14-year issue is at 2.190%.
One thing, this is a revenue bond, so it's equivalent when you go to GEO as a taxable note. So if you're thinking, so it's a good rate when you think about it with non-taxable, it's a little less than 2, but so it's equivalent to probably kind of like a taxable note and a general obligation. So
yeah, well, it's a limited revenues there, as you know, in terms of enterprise. Unlike an ad valorem property tax, where the state statute says we levy a tax without limit to pay our debt, there's limits on the revenues that the utility is producing. So, yeah, your statement's pretty accurate. When we look at that, if you recall, we had a 10-year issue for our CIP, and that was full faith and credit. And we ended up with a tick of a 180. But if you look at the yields, these yields are actually underneath. They're lower than what we were just last month on our GEO.
Yeah.
So that's part of market changing, but it's also part of I think well received. This issue was well received.
Yeah, I was going to say I'm pleased with the results we got. My son, who tends to invest in bonds and not in stocks, and does it in large amounts, said that he had taken a real hit recently on the bonds that he had, and he asked me if I thought municipalities, if they were going to go bankrupt and default on this stuff. So if he's asking those questions, I think a lot of buyers are. I'm surprised that they're not more skittish than they are.
Yeah, that's an excellent point. You know, in Wisconsin, we're frugal people, and our laws, when you look at, you know, the latitudes, the limited latitudes that the statutes give our municipalities in terms of taking risk on investments and how well we budget for you know, break-even budgets, and, you know, our credits are really well received throughout the country. You wouldn't be able to compare an Illinois or a California or something else with this statute. I mean, they're 50 and maybe sometimes 75 basis points cheaper or higher in rate than we are. The risk. Sorry, go ahead.
I was just going to say, he lives in California, so.
Yeah, okay. He should buy Wisconsin paper. But yeah, good point. All in all, outstanding.
Well, good. Any other questions? Doug, did you have any questions?
Yeah. Just curious, Jeff, about the insurance. Is it always that good of a deal? If it was, it seems like you would always buy it. It's a great question. No, it's not always been such a good deal. You know, unfortunately, Doug, it's like any insurer. The people who really need it can't afford it. You know, we pay so much for those credits who don't quite have what you guys have to offer. So, you know, when they gave me the quote of the 25 basis points, which ended up being just over $8,000, it was like, I didn't want to say that to Mark, but it's kind of like, Mark, this is really a no-brainer. But I give Mark great credit because he said, Jeff, I want to have some numbers to back up why we're spending an extra $8,000. And I said, I agree with you. Let's run a present value calculation on the two cash flows. So, but yeah, it's a good point, Doug. Pretty cheap. I mean, really cheap. Yeah.
Any other questions? Joan, do you want a roll call for this?
Sure. Yes. Yes, I
Okay.
do.
All right. Well, clerk, please call the roll.
Alder Wood.
Aye.
Alder Thomas.
Hi.
All right.
Motion passes.
Okay.
Next item, thank you, Jeff, and I imagine you'll be back.
So we'll have a new-
with the-
Right. We have a new call-in number, and what are you thinking, about 15, 20 minutes, half an hour?
we don't start till 7, so
Okay. Thank you. I'll get in right
sometime
then.
after that.
Thank you very much. Appreciate it. Thank you
Thank
so
you.
much. Bye.
Okay, next item 6D, consideration of resolution 20-5-2409, suspending water disconnections during the coronavirus health emergency. Is there a motion?
Move approval.
Second.
Who is addressing this? Mark?
Go ahead, Mark.
At the last meeting, we talked about this, waiving the disconnection through the end of the year. And eventually they don't pay, it goes onto the tax roll. So as part of our current ordinance, we had to pass this resolution to state that we're not going to disconnect at this time. And I did call the PSC a couple times now and haven't got a response back. If we can waive the 10% at the tax roll time. So I'm assuming we'll eventually get some guidance on that, and as soon as I hear, I will pass it along.
Okay, and that wouldn't be happening till later then, correct?
So I assume that it'll come down later on.
Questions, anyone? Hearing none, all in favor say aye.
Hi.
Aye.
Opposed? Motion passes. Next item E is the financial report. Should be in your packet.
Yeah, I'm going to pack, and I kind of also sent kind of an email to a follow-up, some questions that was asked.
All right.
So kind of funny to talk about that, because this relates to the COVID-19 stuff that we've been talking about. So I kind of went through, kind of looked at areas I think there's over, there might be some savings. I'm kind of just going to summarize what we put on here. So room tax, I forgot to put actually market on here, so I'm just going to talk about that. I have not received 2 of them as of today. They're due 30 days after the quarter, so it was due April 30th. They haven't received it yet. I talked to both the 2 hotels. One is in the process of getting it sent. The other one is basically they're having some financial issues. But, they will be eventually sending it in. And they did kind of give me an idea, one of them, what the numbers are. So if I add them all together, what they told me is going to be about $25,000 for the first quarter. First quarter is always down. The next quarter is one of the big quarters. But based on that, projections I'm looking at, we could be about $100,000 at the max. $100,000 short for that. I did talk to one of them. They said at one time they sometimes only rented 2 or 3 beds per rooms per night for a while. Kind of less than 50% right now, so they are struggling. So that number is going to be a number to deal with. Some of their concerns they were telling me is a lot of the big events have been canceled in the Madison area.
Yeah.
So that's going to have an impact on their numbers eventually.
Mark, do we know how long the homeless population will be at Country Inn and Suites? Is there?
They didn't tell.
They don't know now? Okay.
No.
I'm thinking it'll be a while, anyway. So that impacts the number too.
Yeah. The other one is talk about court. Put kind of the page if you want to look, but otherwise the next one is kind of page 36 courts, fines and stuff. I'm projecting about $40,000 short for the year. Some of the bigger issues are looking at the May collections, and they look like they're down compared to last year. I still haven't seen the April report from the court clerk, so hopefully we'll get that fairly soon. One of the issues there is also during this time period, we haven't really been writing tickets, so that's going to have a potential impact later on. I assume that number will next year should be okay. It's one of the numbers that will have effect this year. Park shelters, one of those items that shelters aren't really being rented right now, so I got like a $15,000 loss there. Not sure yet. We'll eventually rent them out, but for now we're not renting them, being used. Boat launch, about $10,000 decrease from last year, and this is based on comparing this year to last year. That's Monona Bank, her interest rates projecting about $75,000 decrease in interest income, just based on what our current cash flows and what our future cash flows are and what our current interest rate is. Right now we're getting about 1.51 from the Monona Bank. We do have some money in LGIP, which is called Local Government Investment Pool. A lot of communities have that. So we have very little in there. We just got money gets transferred in there with certain grants from the state and kind of transferred out. They're at 0.51% for interest. Right? So right now everything's okay for now with their balances. Rec departments, we got about $40,000 if we don't have the after school or summer programs in 2020. It's kind of based on what we have for that. There's some savings. About $20,000 with legal, could be more. I think 20 is kind of conservative. Unless something comes out unusual, costs more. Fuel, about $5,000 for police. Part-time dispatch, I think probably $10,000 is probably a little conservative. I think with the fifth dispatcher we have, and kind of Sarah and what's going on, I think we probably could eventually be up to 15,000, 10 to 15. But for now, I have it at 10. Parks part-time wages, kind of a late start with those guys working, so she could be a saving about 15. Dispatch, service contracts, there's about $10,000 savings this year in some of the contracts. For permit revenue, I did talk with their building inspectors and kind of what they expect from the phase 3, development, riverfront development, and what the expenses are. They're thinking so far, just based on that, we should at least increase about the budget about $20,000. So, total savings about $800,000. So it's about projected about $200,000 loss. That is the EMS funds. With the EMS, projected about $75,000 in revenue loss. There's some savings there, about $55,000, I think, net overall. I'm projecting. One is because 25%, they're down 25% in runs. Just people aren't using them right now during this time period. Another issue we have with them is, we increased the rates, but a lot of the patients we receive are Medicaid and Medicare, and they only pay a certain rate. So no matter how much we charge, the state will only pay a certain rate. Medicare will only pay a certain rate. But they have their own fund balance, EMS. Their current fund balance is about $200,000, actually 204. And that's about 30% if they did their fund balance, 30% of their expenses. So that's a good number. So that pays them, that would come out of their own fund balance, that loss in the end, if there's no changes made. So it's kind of the breakdown and stuff. I know there was a question about, I broke out the COVID-19 stuff on here. There's a little bit with that. So a lot of it's public works, library, and the senior center, and part-timers. I didn't break her out. Those are basically, they don't have like an offsetting revenue. Fire department, EMS has their EMS revenue, parks, the rec department, and school have their own revenues coming in outside the property taxes. So those are basically 100% covered by the property taxes already levied already. So it's just like we budget, there's not really loss there. The rec department, we have those part-time wages that we're paying COVID-19. It's really for the after-school program. With that, there is going to be, a loss there. It's because it's basically we don't have the revenue coming in, so there is a little bit, a loss there on that.
So Mark, when we go through this, I noticed several places you have a note that they're COVID-19 wages. Is that something that we're tracking for FEMA or something, or what is that?
Well, we're trying that for both and internal, also to just make sure that we know what's what on our side kind of internally.
So, for instance, what is a COVID-19 wage in the library?
So at least the building's closed, they were just being paid.
Okay.
And
But
maybe,
they weren't actually working? Is that what you're saying?
Yes, so those
Okay.
people affected by that.
and maybe just to clarify for FEMA cost accounting purposes, we're not able to.
Can't understand you, Brian. Sorry.
Maybe just to clarify for FEMA cost
Now we
accounting.
can't hear you at all.
Never mind, it wasn't that important anyways.
He's trying to fix that. Mark, can I ask you a question?
Sure.
I want to go back to the room tax.
Yep.
So out of the room tax, the city gets some of it and some of it we give out in grants.
Correct.
So if we have lowered room tax, are we lowering the grants or how are we handling that?
Yeah, so the way the tourism committee works is they.
Could you put yours on mute?
Before
Not on
and,
mute,
so
turn off your.
we'll be collecting in
audio?
2019. We'll be paying up grants for 2020. So basically, we're not going to cover the amount of the tourism fund. So basically, they won't have any money to spend in 2021. So there will be zero money that's going to be allocated to them.
So the city budget won't take the whole hit. Some of the grants will take part of that hit.
Well, the city will. Well, we have to make 202,000 room tax. That's all ours. Anything above that goes to the tourism committee.
Okay,
At this pace right now, we're not even going to make 202,000. We'll be lucky to make 100,000. So
okay.
there'll be no money going to the tourism committee at all.
Brian?
We'll try again. See, is this any better?
No. I wonder if we should have you try to call in on your phone when you want to say something. I don't
One
know.
second. You continue on without me.
Can you hear me?
Who?
Will.
A little bit.
A little bit. And you can hear And you can hear Joan no problem when she talks, huh?
Well, Joan is about us. Neither of you are real loud, but Brian is all muffled and there's a lot of interference. Whereas the both of you are pretty clear. At least that's what I'm hearing.
Okay, well maybe he's too loud. I'm going to try a new computer for the next meeting, but it's definitely on my end. And if he does anything different, then it might screw everything up at this point. So.
Well, I'll just go stand over there. Sorry.
Okay.
We talked about also in the last couple of meetings about the paid up premise, calling the fire department. So that'll be something we're going to come back with at the next meeting for a budget amendment for that. Dane's going to be talking, and Chief Affleck will be talking about that at the next meeting.
I've got a question about that, Mark. I thought Dan told me that he has suspended that program and the money was all gone. Now, when I looked at the budget here, it didn't look like it's all gone. Is that because it was the end? He told me that a week or so ago. So is that because it was the end of April or?
Yeah.
Did you retire?
Once you take in what was paid out in May, we're basically at the $30,000 already. So this is through April. So we have a May payment. It was just May. You had that in there. We're close to the budget budget $30,000. It's 19 at April, but once you add in the May payment, the May amount, which is another about 6,000 or 25,000. So they'll almost be at their budget already.
Yeah, we've got to get a handle on that.
Well, he'll be coming back at the next meeting to talk about that
Okay.
budget amendment.
Brian, are you there?
Yeah, I haven't left. Can you hear me now? Can you hear my audio at all?
You're kind of quiet, but
Okay. What I was going to say before is for FEMA cost accounting purposes, just to be clear, we cannot get reimbursed for lost wages that go out for programs that we're not able to have open. So we're not able to recoup lost revenue from a program or wages that went out to pay for a program that we're no longer offering. We are only able to submit reimbursement requests for basically things that are in service of our response to the COVID situation. So mainly for us, that would be any sort of PPE or cleaning supplies that we purchase, or if there's overtime that's related to our emergency service response related to perhaps a COVID patient or something like that. So we are tracking what we're purchasing and what we're kind of stockpiling for our response, but there will not be a ton of costs that we'll be able to get reimbursed back with this whole process.
don't we also have to pay like the first 3,000 or something?
It's kind of like a deductible. We have to accrue at least $3,300 worth of expenses that are eligible, and then after that, the reimbursement kicks in, where the federal government will pay back 75% of whatever that total dollar amount is. The city has a local share of 12.5%, and the state has another 12.5%. The city can buy down its 12.5% by any sort of donated PPP or other materials that are submitted to the city, and we're keeping track of that as well.
So the upside is we're not looking for any significant money from FEMA at this point.
I don't know if I'd call it an upside, but yeah, that's kind of the reality.
Okay. Anything else about the financial report?
I don't have anything else to add unless somebody has questions or concerns.
Kathy or Doug, did either of you have questions? Okay. Kathy, did you?
No.
Oh, okay. Okay, then I think we'll move on to item F, acceptance of general fund accounts payable checks dated May 1st to the 14th, 2020. Documentation of invoices paid is available in the city clerk's office.
Yep. Just want to hit a couple things. Page 83, Johnson Tree Care. We're still doing the ash tree removal. Underneath that, Madison Metro Sewage District, a couple down. That is our first quarter payment, $234,000. We paid to Madison Metro. We had much on this. There wasn't a lot of stuff.
I had a question on page 82.
Okay.
Okay.
First Transit.
Yeah.
Do we have a contracted amount that we pay them? per month, or how, and what are we looking at in terms of revenues? I'm assuming the revenues have gone down quite a bit.
Yeah. That one's a little bit different because of how the grant works. We do have a set, set contract with First Student that's been running the whole time during the Stay Safer at Home order. We have seen the Monona lift. It's been used a lot more than Monona Express. There will be a little bit of a loss in the transit fund. But we just had 3 audits settled with the state, and we actually made more money than I was expecting. So that should offset the losses that we're going to receive this year in that fund. That was also, I didn't put that in there, but we're probably projecting probably about $6,000 loss in that fund. So
Okay.
before the money we get extra from the audit.
Anyone else? Is there a motion to accept the bills? Kathy, you're on mute. Kathy, you're muted. There you go. Okay.
Second.
Doug, were you going to second?
Yeah, sure.
Okay. Any other questions? Okay, all in favor say aye.
Aye.
Opposed? Bills are accepted. Now we are going to convene in closed session. So Brian, do we just keep this open and then, or do we close out? Well, I guess we don't really, I don't know. What?
They're
Because we
looking,
have a separate,
they're looking into it. Just give them a minute here.
No, so yes, you will. I will close this meeting, and then everyone will enter the closed session meeting. Once we close the closed session meeting, you'll go back to this calendar invite for this meeting, go back into this meeting, and I'll let you back into the open session one.
so we should leave this meeting, right?
Correct.
Am I understanding that right?
Yes.
I thought there was a separate invite for just closed session.
There is.
There is,
yes.
but we're going to have to come back to this one. So but I guess we're going to just open it up again
That's
later?
correct. Yes, correct.
Brian, I don't know that I got the separate invite, so if you can email that to me with the new Zoom number.
Yes.
And is that the one that says it's at 6 o'clock?
I think so.
Yes.
Okay.
Okay, so we're leaving this meeting, going to the closed session, then later on, we're going to come back to this meeting later. Okay. And when we leave it, we're getting out of it completely. All right. See you all soon.
We need to take the vote.
Oh, I'm sorry, we need to take a vote, you're right. Is there a motion to go into closed session?
No.
You need to read the announcement too, Mary.
Oh, okay. Convene in closed session under Wisconsin statute section 19.85, paren 1, paren E, deliberating or negotiating the purchase of public properties, the investing of public funds, or conducting other specified public business whenever competitive or bargaining reasons require a closed session, and section 19.85, paren 1, paren C, considering employment, promotion, compensation, or performance evaluation data of any public employee over which the governmental body has jurisdiction or exercises responsibility. This is dealing with a couple of things: the Yahara Commons Phase 3 Third Amendment to Development Agreement, the acquisition of Schluter Road property, and seasonal employee personnel matter. Is there a motion to go into closed session?
No.
Second.
The clerk, please call the roll.
Alder Wood,
Aye.
Alder Thomas,
I,
We're in closed session.
Brian, if I don't show up, re-invite me.
Okay. Yes.
That Aye.
Opposed? We are adjourned.